The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, this is the Diagnostic Trading Hour. My name is Darrell Martin. I'm your host today, and we're checking out what's going on in the markets. If you have any questions, by the way, feel free to give me a call. You can always get the number right there off the homepage of TFNN. It's 877-927-6648. Again, that's 877-927-6648. And right now, checking out the markets after filling their gaps. They're bouncing off a little bit. So for the Nasdaq's having some continued weakness. We got the S&P up 6-7 points right now. We got the Nasdaq up about 15. We got the Dow up 128. Went up 60, fell all the way back down, and then flew. Just flew back up. We got the Russell up 1.3 right now after quickly filling that gap early this morning. We got gold down $1.30 on the day. And then looking over at copper, we got copper up almost a percent, 0.8% right now. We got silver is just about 1/3% right now. We got corn up 5.5 points. We got soybeans up 20. On oil, at the moment, it's down 28 ticks. And on natural gas, it is up a whopping 4%. If you're not trading natural gas, you're missing out. The thing is moving like crazy. You want some volatility? You got it. Just look no further than natural gas. It's been awesome. And again, you want to trade limited risk because it can be sort of crazy, right? So 4% up means 4% down too could happen. So that's why I trade over on Nadex. You can check out the spreads in the binaries over there. Check that one out. We got the euro dollar pretty flat on the day right now, down 9 pips at the moment. Pound dollar flat. Aussie dollar is down 6 pips. We got the US yen up 46. US franc flat on the day. And the US Canadian is down 15 pips. So that takes us around the world, lets us see a variety of markets. And we also have the bonds and everything ticking up a little bit at the moment. And then looking at a couple other things, what do we got going on in the world of the fundamentals? On the fundamentals, let's see what we have going on today. Well, last night we had the Aussie dollar released its GDP, but it came in pretty close to expectations. It was at 0.5. They expected 0.6. So that didn't cause any kind of major move right after that announcement came out. Then we had the services PMI on the pound dollar. Go ahead and pull up the charts. We'll scroll on through these as we're talking about them. And let me get that up right there. We'll go in, check out the Aussie dollar from last night, and we'll drop down, look at a shorter time frame here. Let's get on into the intraday, and we'll go down and look at, say, 10-minute bars. If I'm using minute bars, that's the bars I'm looking at. And we can see over here, let's see right now, I got my chart set over here. Just want to make sure I got them set at Central Time. And so pound dollar 433.30, we're on Aussie dollar, sorry, 736.30. And scroll on over here, we got, let's see, 1830. No big move. It did come down from 1.0475 down to about 1.0464, but 10 ticks is nothing. It finally did move on down quite a bit. We'll go over the deviations a little bit later. But it wasn't a big announcement because it wasn't a big difference in the expectation. The pound dollar, we go in, we check out the 4:30 a.m. trade, which would have been, let's see here, 3:30 Central. So if we hop on over, check this out. Pound dollar didn't move a whole lot of that. Again, it wasn't massively different. It was 1 point different, basically. They expected 51.1. It came in at 50.2. And on those news trades, you really wanted to be a lot different than the expectation to get the big move. The Spanish 10-year bond auction came in a little better than expected, and that did probably help levy everything off at 445. It came in at 5.29, and last time it was at 5.52. So you see the Spanish bond yields ticking down at the moment. Looking on over, we can also check out 7:30, 6:30 Central right here. This news trade had a little bit more of an impact. Not massive, but did have an impact. And again, that was the autumn forecast sentiment report that came out at 6:30. And we can see it sort of came out, market moved a little bit, and then it did decide to actually make a bit of a move there, dropping about 20 pips or so. And scrolling on forward, we get into the US of A. And so right here on the USA, we're dealing with quite a bit going on. We still have this whole fiscal cliff crisis. It's good one day, it's bad the next, and you just never know where it's going to go. The last interview I just saw with Geithner basically said, you know what, if the Republicans aren't willing to raise the rates on the top 2%, then no agreement will be made and we'll go over. So it's been interesting to watch. Really, Obama has been masterful, okay, in his plan, because if the Republicans do agree to the tax increase, which they've, basically campaigned and were elected on, the basically the idea of not doing it, then what happens? Well, they go in and it will split the party. It'll break the party up, and it'll give him more strength and give him more power to possibly take control of the House midterm elections. If they don't do it and stick to what they were elected to do, then, of course, it's going to be all their fault. Now, Obama, I'm sure, will take some of that blame. I mean, they should have some responsibility. If one party's not budging, the other party should make some concessions just to make things work for the good of the country. However, the reality is we know how the media campaign is going to work. They're going to blame the Republicans, and they're going to look like they're the ones that are causing, GDP to slow down. And if you want to get a job, if you want unemployment to grow, if you want everything to get better, well, then elect a Democrat. That will be the campaign message. And the reality is, it has nothing to do with any of that. It's all about politics. It's all about splitting up the Republican Party. It's about making them look bad in every way possible. Because if it was about revenue, then he wouldn't be trying to get more stimulus money. He wouldn't be trying to. Literally, he's put forth a proposal. He's trying to get the agreement to give him the ability to either, one, be able to raise the debt ceiling without congressional approval, any amount he wants to, or two, just eliminate a debt ceiling altogether. Because that works so well for Europe, and Greece and everybody else. But that literally is what he's going for. And obviously, the Republicans aren't going to approve that either. But we can see that's what he wants. He wants the ability to basically spend as much as he can and not worry about the consequences for future generations. And really, even our generation, the next generation. My daughter and son, I'm like, man, they better learn how to trade, and they better check out foreign markets, because they may have to be moving to Singapore or something if the tax rates keep going in the way that they're going to have to go to try to take care of, what's been happening. Because they aren't going to lower... You have to raise tax rates. They're not going to lower expenses. And the thing is, raising tax rates doesn't work. That's sort of the crux of the matter. Just look at the states that have raised tax rates and the problems they have. You got New York, you got Illinois, you got California, all these high state income tax rates. And guess what? People move out. People leave. They come to places like Texas. Yeah, Texas. That's where I'm from. And where we don't have state income tax. You have property tax. You know what? You can be a millionaire and live in a, small house, and you don't pay that much. So, you can get and of course, you can also get a house a lot cheaper. So you can get a house for $150,000 that's 3,000 square feet with a 2-car garage and, brand new house. So, go out there, you're going to pay, 2, 3, 4 times that amount. So, anyways, we can see where it's going. We also have the the ADP non-farm employment change. That number came in. It actually, I'm sort of, surprised. Just let me show the overnight here. We'll get that earlier so we can see the, what's the wrong button? Let me go ahead and pull up the settings. That's where we go. Settings, and we'll turn on the extended sessions. And so we can see sort of how these reports affected the market this morning. We came on in, and we had the ADP non-farm employment change. Came in at 8:15, 7:15 Central, so right around here. After that report came out, a little bit of spike up, knocking out some stop orders, and then it went ahead and proceeded down. That makes complete sense because that non-farm employment change report and the revised non-farm productivity report both came in worse than expected. Not only did they come in worse than expected, but 118,000 is the lowest number we have seen since it's like November of 2011. So literally, we have not seen this bad of a number for the entire year. Of course, Sandy would have impacted the job market, but still, bottom line, that is the worst number we've seen since November of 2011. And market fell on that, filled the gap. I traded the gap on the Dow and on the Russell this morning. So you go over here, you took out, the Russell, had a nice little gap right there, right here, and then opened up, and then just boom, filled it right in really quick. It was great. Dow, I was watching it. I didn't trade it right on the open because there really just wasn't enough to do immediately. But if you go down, let's see, I'll bring it down to the 1 minutes. So you go in here, it wasn't tight enough for me for my rules, but all of a sudden it did a little rally up, about 20 points or so. We had about 60 points to move. And I went ahead and did a fade the gap on that, and then I shorted it, and then it took its sweet little time, and finally it came down, filled the gap, went a little bit lower, and then spot on, bam, flew up. So on that gap trade, you always want to get out when the gap fills. And I don't trade every gap trade. I look at chart patterns, I look at volume, and I look at the size of the gap before I decide it. But that was the two great gap trades. Did those today, and they made sense. This whole rally up, so a little bit of a little crazy that's going on right now. But and we'll see as the day plays out, just everything that is affecting that. But you got Citigroup slashing jobs, you got the layoffs coming in, and despite Citigroup slashing jobs, it gets rewarded for it. Why? Well, mainly because that's cutting cost. But yeah, this whole rebound has been sort of just been crazy. seeing, everything that's come out today with the jobs reports and all that stuff. But nevertheless, rising on up. And then, of course, I'm sure you've already heard if you've been on TFNN, but if you haven't, Facebook is joining the Dow. They actually changed the rules for the Dow 30. It used to be you had to be in for 2 years listed on the Nasdaq before you could become part of the Dow. But then what they did is, knowing that Facebook was coming up and knowing it was already a major market cap stock, they went ahead and changed the rules before they got listed to make it where you only had to be on for 90 days. And so 90 days is hit, and they'll be on there effective December 12th. And so Faceplant may actually become Face Rise soon. And we've seen a pretty good rise on it already so far. If we go and look at it, I mean, at these lows down here at $17.55, it's up $10 already right now. And as that news comes in, of course, and then what's going to happen? Think about this, part of the Dow, okay? And we talked about this before on our seasonal analysis. Talk about how payroll cycle, what happens on payroll cycle. People get paid, and major corporations, the first and the middle of the month. So you got the last few trading days, first couple trading days, and the middle 3 trading days of the month, where the market actually the Dow gets pretty much all its gains during just those few days. Now, I'm not saying the market doesn't go up on other days. I'm just saying if you took all those gains, you'd have just those days, you'd have all the gains in the Dow. And so as people get paid, money goes into 401ks, money goes into mutual funds, money goes into buy stocks. So that's part of the mutual funds. And so those stocks that have an index following the Dow will, no doubt, obviously be having Facebook as part of them now. And so Facebook will be impacted by that payroll cycle even more heavily now that that's in place, and or once it is in place here on the 15th. But anyway, just an interesting little tidbit of information for you. And then going through and checking out, what else we got. We got the ISM manufacturing PMI. That number came out at 10 a.m. We can check that out. That number came in, better than expected. And that's probably about the only reason I can come up with where we get the nice little rally. And again, that was 10 a.m., but it really didn't. It came out at 10 a.m. Eastern. 9 a.m. was when it first came out. Market was still going down on that report. And so we go over here and we can see, just sort of, how things are working out as a whole. But I guess the market finally woke up and said, oh, ISM was good. It was at 54.7 versus 53.6. Still not a major change. Not, like way better than expected. Not even one of the best numbers we've had in the past month. We had 54.2 last month. We had 55.1 the month before that. But nevertheless, that's the major news I can see right now that's helped us drive the market on up. And then looking over and checking out some, other things we got going on. Let's see here. We got a crude oil inventory report. It came on out. Had a little bit of effect on the crude market. I put a little mini straddle on that one. And was able to get out at, a little better than break even. Trade sort of flattened out. It just, went down and just sort of stopped out. And I went ahead and hopped out of the trade. Unfortunately, I did because it went back up. And now it's, pretty much flattening out on the day. Looking on over other contracts, other things we got going on. If you're a New Zealand dollar trader, they're doing their interest rate tonight at 3, or actually this afternoon, sorry, at 3 o'clock Eastern time. So definitely be aware of that if you're trading that currency pair. And stay there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right. Welcome on back here to the Diagnostic Trading Hour. And we're just going through and checking out all the reports. We got the official cash rate. We talked about that one. Moving on forward to tonight, we got the employment change report at the Aussie dollar, 7:30 p.m. So that, again, that number comes out at 7:30, and you can definitely be checking that one out and looking at it as a potential market mover. And you can do a straddle. You can wait till it comes out. You can go directional with it. Both strategies are strategies I like to employ. I also like to play them off the deviation level. So like when they hit it, I may go in and fade it and do a trend reversal trade on it. And then looking on over here, let me check this out. And looking at a couple different markets, we got what we got going on tomorrow, just so you're ready. Frank, we got a Frank trade coming up. CPI number is coming out. Okay, so they expect CPI to come in at 0. It came in at 0.1, 0.3. Basically it's been off quite a bit. Looking at the past, it's off about half the time. So you can check that number out again, the CPI number, and that will give you a USD Frank trade there. And you can get it at bfs.admin.ch. And so you can go in there and look at that. And then if you have Google Chrome, it's pretty cool. On my screen right here, you can see this page is in German. Do I like to translate it? Yes, I would like to translate it. And boom, there it's in English. And then just click on Topics and click on Indicators right there. And you'll see that you'll be able to access that. Be right there available for you. So we got that. I'll go ahead and post that link over in the Tiger's Den for you. And there we go. So that's a Frank trade coming out. You can check that out in the morning. Again, they expect it to come in at 0 We'll find out where it actually comes in at. And then looking at what we got the pound dollar asset purchase facility report coming out at 7 a.m. And that'll come out by the Bank of England, and you can check that one out right there at bankofengland.co.uk. Again, asset purchase facility. And that's usually a decent market mover. I'm not going to say it's massive, but it is a market mover, so you want to be watching it. It may be one of those trades you want to trade in the direction after the report comes out. And they're expecting the number to come in at $375 billion. They've been at $375 billion constantly. So, it's been just, they've been at that since June, and it's come in consistently. And very rarely is that number off. So it's not necessarily a straddle-style trade, but it definitely can be whether you can trade directionally. They also have the MPC rate statement, so their bank rate's going to be coming out at 7 a.m. So again, that's a big, okay? That usually is, a market mover at some point. We don't expect to see a big change on it, but nevertheless, it still usually adds strength or weakness to the pound. And again, that'll be on the exact same website on their monetary page decisions. So you go on their monetary policy, click on monetary page decisions, and that's bankofengland.co.uk. And again, that report's 7 a.m. Eastern Time. You can trade that one in the morning. And then we also have the minimum bid rate coming out on the euro. And don't really expect to see a change on that. We haven't seen a change since June. We could see another one, who knows. If we do that, definitely be a big market mover. But nevertheless, either way, there'll be, when that comes out, it usually does move the market one way or the other. And then they'll also have a press conference. That's going to be probably one of the bigger market movers, seeing what comes out of that press conference. That press conference will come out at 8:30 a.m. And you'll be able to see both of those over on the ECB website. And you can go over there, you can go to press releases, and you'll see it. Let's see here, I'll show you where that's at. So TV services, press releases, and you'll see webcast, and you can watch it on the webcasts. And you can also look at the different press releases that come out. And that's ecb.int. For the thing. So the 830 may actually be a bigger mover than the bid rate, unless they do change the bid rate. And then for the U.S. Canadian, we have the building permits report coming on out. So that one, they've been off quite a bit. So like they expected negative 2.6, it was negative 13. The one before that, they expected negative 0.7, it was 7.9. Well, for that, they expected negative 1.5, it's negative 2.3. So, they do miss that number a lot, and missed numbers are good for trading because that usually means more volatility. And so right there on the Canadian website there, statcan.gc.ga, and you can pull that up. I'll go ahead and post that link again over in the Tiger's Den, get you access to that one. And then looking on over, we got the, like I said, that'll come out the same time as the ECB press conference, by the way. So that's on U.S. Canadian for the building permits. And then unemployment claims. Of course, it's all about unemployment this week. Unemployment claims will be coming out at 8:30 a.m. in the morning. And that comes out by the Department of Labor. It comes out every Thursday morning. And so you can hop on, you can check that one out. That comes out on DOL.gov on the media press section of their website. And, so you'll definitely want to be on top of that one because that can have an impact, especially if it's like massively off. Last time it came in pretty much at expectations. 392, 393 is what it came in at. But if it comes out off of expectations, that's when you can see some big moves. And like we saw that one on November 15th, it came in at 439,000. That's a massive difference. So whenever we see that number come in. And then scrolling on over, we got the IVP and My report coming out in Canada, and we'll cover that one right after this commercial break. Stay right there, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour with Darrell Martin. We're going through the fundamentals as a trader on diagnostic trading. What you want to do is you want to be one step ahead of the markets, right? And we talk about maximizing leverage, minimizing risk, but you also need to be one step ahead. So how do you be one step ahead? What does that mean in reality? Like just, bringing it down. What it means is to figure out where the orders are. The market goes to where the orders are. So if you can figure out where the orders are, then you actually have a chance to be one step ahead of the markets. And so that's literally what your entire goal is to accomplish that. Well, you do that by looking at how other traders look at the market. Okay, so you look fundamentally. Okay, well, they're going to be placing orders based upon fundamental government reports. That's timed. You know when that's going to happen. Now, there's other news you don't know is going to happen, but you know that's going to happen. And so that's where you can do seasonal trades, things like that. There'll be orders. How far will they go? Well, that's where something like statistics comes in. That's deviation levels. That's how far the market said the market's going to move in a given day, and not standard deviation, but implied deviation levels, diagnostic deviation levels, like what I post over on the site. So you definitely want to have that in your arsenal. Most traders don't even think about deviations, and it can really, it can get you when it comes to trading. Sometimes the market will move so far, and you shouldn't be hopping in a trade. But that's how trading goes. But you want to be aware of the deviation levels. And then you got your technicals. As traders, if you're a trader, if you're a short-term trader, you love charts, you love chart patterns, you love technical indicators, etc. I use indicators more than anything to tell me when not to get into a trade, more than when to get into a trade. But chart patterns are definitely I use one pattern specifically, and that's all I use when I'm using any kind of directional trade by itself. If I'm doing directional intraday hardcore trading, then I'll be using one simple pattern. And then you go down and you also have your fundamentals, you got your technicals, you also got your seasonals. So what does the market usually do? Usually the market is up this week. So we'll see how that turns out overall. And usually it's up through the end of the year on the seasonal cycle. And we would have a lot more strength in the market overall right now if we didn't have stuff going on with what's happening in the market with the whole fiscal crisis. Looks like we got a caller on the line right now. We got, let's see, who do we got? We got Kim from Alamonte Springs, Florida. How you doing?
I'm doing okay. How are you doing today?
Doing great. Did I get that right, Kim?
Yeah, it's actually Cam, K-E-M.
Cam. Okay, awesome. All right. So learning something every day. There we go. So what you got for me?
Walmart. If you could just pull up a daily chart on that.
There you go.
And have it on the 50 and the 200-day moving average.
Okay, yeah, I can add those on there. Let's see here. Go down to moving averages, and we'll go into simple moving average. Add that one on, and it's probably easier to do it this way. Hop on over here, and let me add the other one on there for you. We got, where is it at? There we go. So SMA envelope. It ought to have simple. I guess get my my alphabet down. That would help. And so we'll add that study on, and then 50, your classic strong moving averages there. And put 50 on there. We'll make the slower one. We'll make that red just so we can tell the difference. And there we go. Okay.
Okay.
All right. So what you got? What's your question?
My question is, if this thing doesn't get up to the 72, here, let me bring up my chart again. 72.25. Could this fail and go back to the point where it gap back down on November 14th?
So yeah, right here, or the 15th. I think definitely it could fall back down. You have a high volume bar right there, so you have your real price going on. Okay.
Right.
So there's a magnet to that price and the low of that price. So the low of that price could be 67.85. So that definitely is going to be one of your strongest levels right there. It is going to want to potentially go there. It already went back in. It filled the gap, and the thing is, when it filled the gap, it didn't really do so with impressive volume. I mean, you see like this right here, comparing the volume right here. I mean, it was it's just average volume when it broke through that gap. So it wasn't a whole lot of commitment to it. So I could definitely see if it's not able to break out really. What I'd be looking for myself is if I'm in the trade right now, then I have my stop actually would be right about here. The low, if I was long, at 69.29, and then I'd be looking for, if I was looking to take another entry, I would actually wait till it broke the previous day's high. So it'd have to break today's high tomorrow. Like I wouldn't get in until I got a retracement. So I can see when there's a little pullback right here, a little lower high. That's when I look to buy. So I wait for it to pull back, and then I wait for it to break that high, and that's when I hop in. And so you had an entry there, we had an entry right there, and then we'd be waiting for a breakup right here to be a confirmation that the momentum's going in our direction. And then as soon as that happened, once it got to the high here, I would take off some profit, and then I would tighten my stop to the low of the most recent bar since the most recent high. So this most recent high, whatever the lowest bar is, after we get in, that'd be where to have my stop loss. And then once I took off my profit, I'd move everything up to break even on the trade. But if it does fail and continues to go down, then now it'll probably go with the rest of the market. So this whole trade right here is going to be really dependent on the fiscal cliff itself.
Okay.
Walmart is seasonal. It's a seasonal stock right now. It's retail. This is their best time of year. And they'll be expected to have a good earnings report, obviously being, Christmas and everything else going on. So, it should seasonally go up. And Republicans right now, I just saw a news report come over the wire off Bloomberg that they're trying to get a whole lot of people together to go ahead and just compromise and make a $500,000 increase. Basically, people that make $500,000 or more. They're trying to get that passed and see if Obama will agree with that. If they'll do some entitlement cuts, who knows what will happen. But if that falls apart, it'll just drag everything with it. But if that goes through, Walmart by all means should rise and should continue to break above this 200-day. I mean, it's in a bullish pattern. You really can't deny that. You got your 200-day, you got your 50-day. Where you got to watch out for is what's called the death cross. Okay, and the death cross is when you go in and let's see. I'll show you a death cross on here. Let's see. It's basically when you're
Apple,
50.
Apple was actually close to doing the death cross.
Yeah, so basically when it drops below the 50 drops below the 200.
Right.
So you got to watch out. Like you can see, like right here where it dropped below, and then just bam, And yeah, if we look over at Apple, we got the death cross. Yeah, I mean it's right on it. And so if that does cross there, then that's usually, I mean, we're already getting a big down move, but we can get a big down move, like a massive down move if that death cross happens. So a lot of things are starting to add up that looks like that might happen. And sort of happens the opposite way, too. You can see when it crossed right here, we had that long-term bullish pattern on Apple.
Right.
And this would be the point where you'd be saying, hey, you know what? Maybe you want to get out pretty soon on Apple and see what happens next. But, yeah, Walmart, I mean, are you long in the position right now, short, or are you just checking it out? Or?
I'm long in it, and I got back in. I bought a call position a while back, and I got in and out of that. That worked out pretty well.
Yeah, awesome.
But Walmart, where did I get in at Walmart? It was actually about a month ago, close to the bottom here. I got in at Walmart back. Actually, it wasn't a month ago, just a few days ago. Back on November 20th.
Okay, well that ain't bad at all. So you guys got in here right after it did that pullback up, so that was good.
Right.
So are you in the stock right now?
Yeah, I'm in the stock right now. I just sold off a 72.50 call on a weekly option. I sold that off. I got in dirt cheap. I got in like 8 cents and sold off at like 30 cents for a 72.50 call, and I'm out of that. And but I was just wondering. I was thinking about just selling everything I have. 'Cause I only have like 1,000 shares of the of a Walmart, and I was thinking about selling it and wait and see if it's going to pull back, or wait and see if it's going to go above 72.25. Set itself up above the 50-day moving average, and then maybe get back in again.
Yeah, what you could do is either, I mean, right now, selling right now is going to be great based on where you bought. So, I mean, that you're not going to, I mean, you may give up some profit, you may not. I definitely would be tightening my stop on the trade. Like, you could even put it to, like the low of today if you wanted to. Okay. So that way, what happens if things shoots up to 73, 74 tomorrow, So, if you're willing to give back, 60, 70 cents potentially for the ability to have a potential run up in the, the trade, then that could work out for you. Also, another thing, and obviously you're familiar with options, you might want to consider something like a dynamic collar on the trade. Okay. And a dynamic collar, you're going in and you're buying a put to hedge it. So let's say if you're willing to get out, at 71 or so, then we'll go here, we'll find, where we find the best strike for ourselves. And looks like they're all going to be right at 70. So you could do maybe a 70. That'd be more money to get up, or you can do a 72. But to set off some of that, right there, what you could do is you could actually go in and then you could sell a call, so further out. And it depends upon how far out you want to do it. You usually don't want to go in and do a collar with less than 30 days till expiration on it, so you're probably looking at the 44 days on the dynamic collar. The reason I call it dynamic is what I do is I'd go in and say, like, buy the 70 and say sell the, like 75, okay? And that reduces my cost on the trade, so I bring in 34 cents, I pay 80 cents. So, that's if you're paying, and the spreads are so tight, you're pretty much going to be paying that on Walmart options because they're so heavily traded. But you go in here and that reduces it to, a little less than 50 cents on the trade to give yourself a hedge. Now, you could lose down to 70 on the trade if you did that, but, and then, you give up a little bit of money on the premium. A dynamic collar is where you actually dynamically change it. And it's a pretty cool strategy. You go in, if you're bullish on the stock, you go in, you buy a put, you sell a call, but every time it moves up, you could do a strike, or you could do every other strike if you wanted to. Then what you do is you actually buy back the sold call, okay, and then sell another call above it. And then you sell out the bought put, and you buy another put above it. Okay, so basically just roll up your collar. And you'll give up about half the gain every time you do this. You'll give up like 50 cents every time it makes, say, $1, okay? So if it made $2.50, you'd basically give away $1.25, and then you sort of locked in $1.25. Once it gets above where you originally, bought the stock, then at that point you're giving up $1 to make, or you're giving up 50 cents to make $1 all the way up. But now you're not freaked out, and you have the ability to to ride the stock as far as it goes. But that collar is going to help lock in more and more and more of that profit as it rises. So that's one of the fun strategies to do. So
now I should be doing this for maybe those options. I should do it for January.
Yeah, I would be looking at, you really want to look at, because the thing is, in the last 30 days, your theta goes through the roof. And so like, if I hop on over here and, like I'm Think or Swim and I pull up and I check out the Greeks right here, you can see how theta right here is, and you can't see this big because they're not as heavily priced, but about 2 cents, 1 cent, they're going to get down, and really it's going to be smaller than this. You just can't see it because the decimal places are in there. I don't think they let you see all the, you'd have to go in and look at like, actual quotes on them to get the exact theta. But your theta gets higher and higher. So basically right now your theta is double on a 16-day. And if you go up here, see it's like 4 or 5 cents, it's even double on like a 2-day. Because this option has to be, basically all this premium has to be gone at expiration. There can't be any premium in the option. So you got, you're doubling it 2 days to, 16 days, doubling again 16 to 44. So, 44 days, it's only 1 cent a day you're paying in premium. And then on the flip side, you're collecting premium on this side, which is pretty cool. So basically, you'll pay 2 cents and you'll get a penny. Pay 2, get a penny. Pay 3. You'll get more on the calls, but the problem is with the calls being too short term. They're not. To me, it doesn't work near as well for you on the short term calls. But you want to have at least 30 days as the bottom line whenever you're doing a dynamic caller, and you probably want to be rolling at about 30. So at about 2 weeks, you probably want to be rolling again to the next options when they come out. So when the February's come out and everything else, you'll be rolling into those, and just keep rolling them up as you go, ideally. And now, as soon as you're not bullish on a stock anymore, there's no reason to do this trade at all. Okay. So if you give up on the bullishness of the stock, just get out. Obviously close your call when you do that, so you don't have a naked call out there. You could leave your put on if you wanted to. So if you think the market's just falling, then if you're like, let's say it goes down and let's say that death cross happens, whatever. But if we scroll on over here, well, if it hit 70, the death cross still wouldn't have happened yet. But you could definitely, your call, you'd have all the premium. You'd probably be able to close that out anyway. And another cool thing, this is something I do with the dynamic caller, is let's say it's sort of oscillating and it drops down. And let's say you've made a majority of the premium on the time decay on the call. Okay. So because your put would have went up in value if it goes down, but your call would go down in value. So let's say if you sold this call over here for, we'll just say $1.09, okay, 72.50 or even 34 cents. We'll probably be a little higher, so you have some room to make some money in there. So you sell this one for 34 cents, but as the market drops down, then let's see here if they'll. I think they have the option on here. Yeah, they used to have it, but it's probably over the theoretical. But you can go in. Oh, I know where it is. Let's see here. Theoretical price value. There we go. So you can say, well, what would happen if the stock fell? We'll just say today. Let's say the stock fell $1.76. So minus $1.76. Then this when you 34 cents now is worth 12 cents. Okay. So this call, but your put that you bought 81 cents, is now worth $1.60. All right. So you have a couple of choices. The main one that I would do if I'm sticking with my bullish plan is a lot of times I'll buy back the call. Okay, because I've already made basically 70% of the profit that call can make, and then if it goes back up, I may sell the call again. So let's just say if it's just oscillating over the next couple of weeks, right? And it drops down $1 or so, you buy back, the call goes back up $1 or so, you can sell the call again, because you're protected the entire time. So you're sort of swing trading the call, but collecting premium in the process. But if it does go up, that's not a bad deal. If it moves up to $75, I mean, you've made an extra, $3 or so on your stock, and let's say if it gets called away from you. And it may not get called away from you even if it's above it. Sometimes it won't get exercised on. And if it doesn't, then, you may be able to close it out, or, you can, if you're rolling up your calls, you won't ever get called out on, because you'll constantly be rolling them up out of the money. But there's just a couple ideas for you on how to hedge the trade.
All right. Thanks a lot.
Hey, you bet. Thanks for calling in.
All right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain obtain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And we're just going through the markets, checking things out. And it looks like the last news thing we got on the calendar for, let's see, today is going to be the unemployment rate over on the Aussie dollar tomorrow. And so that report will be coming out on the Australia's website, abs.gov.au. And so you can check that one out. That usually is a decent market mover, you know, maybe 20 to 30 pips or so, especially depending upon how far off that number comes in. And so that will basically get you all set up and ready to go. And then the big thing is you got to be ready for, you know, basically the reports that are coming out tomorrow morning as well. And tomorrow morning we got the CPI, we got the asset purchase facility. So you got CPI over in U.S. franc there. And so we talked about that a little bit earlier, but you can go in and check that one out on the CPI number. And just make sure you translate it unless you know German. And hop on over to asset purchase facilities. We got that at 7 a.m. tomorrow with the Bank of England there. So that number will be coming out, and that will make a, like I said, a good rate statement there. And we got the rate statement coming out on the euro dollar as well, the minimum bid rate. So all those coming together with the unemployment rate, the IBPMI, and the trade balance, got a good, solid euro dollar trades coming up in the next 24 hours. So, just check those out. Now, if you want to be trading on the euro dollar, if you want to trade natural gas, which is moving like crazy, if you want to be trading the future indices, but you don't want to lose your shirt, okay? And hop on over to the homepage of TFNN.com. Click on Nadex. Once you click on Nadex, go ahead and click Create Account, and you'll be able to open an account. And you'll be able to trade within as little as 5 minutes. You can get an account funded, okay? And you're talking $100 to fund an account. Now, I put in, I definitely recommend putting in more, $500, $1,000, a couple $1,000 at least. And you can put trades on for $10, $20, $100, $500, whatever you want to do. But your trade is your risk. The trade is your stop. You cannot get stopped out of your trade. And so no matter how far the market moves against you, you can't get stopped out. You have time to be right. And there's nothing quite like it. I mean, you're sitting there. I'm shorting the Wall Street 30 this morning. And, whenever I was playing the gap fill trade. And that's a trade that I would have been flipping out on probably if I was going in and actually trying to trade this trade on the futures market. I mean, because look at this thing. The thing's going up, and, you drop over and open up everything over here. And you can see that, this thing's going up in here, and you're getting a little nervous, and it keeps going up, comes down, keeps going up. I mean, you're just sweating, and you're waiting for it to get down here, and you're wondering for, a good period of time. I mean, you're talking an hour. Is it going to fill the gap? Is it going to fill the gap? Is it going to fill the gap? I hope I don't get stopped out. You don't have that. I have till 4:15 for it to fill the gap. And so I go in there with completely defined risk. And the trades I'm putting on this morning, I mean, we're talking like, $15, $20 risk on the trade, 25 at most on this trade that I was doing per contract. And you could do, one contract, you do 100 contracts. You can go in, you short it, you just chill out, you're waiting, and then all of a sudden it finally drops on down. And I'm able to make money on it. But I'm not sweating. I had no sweat, no fear. My heart rate didn't increase because my risk never increased, and I had no risk of being stopped out on the trade. Now, as soon as that gap filled, I got out, okay? And, like I said, I don't trade every gap. I make sure the pattern aligns. I look at the volume. I look at the tick noise, basically the electronic volume, electronic market noise, and I look at a few different things with it. But the point is, I'm trading a reversal trade. I'm going against the market. It's clearly going up, and I'm shorting. And I don't have to worry about shorting into a rising market thinking I can get stopped out because I can't. And it opens up so many new trading opportunities for you that you don't even have right now. And you can get those, and you can check it out. You can check out the binaries. You can check out the spreads. If you want to learn how to trade this, hop on over to TFNN.com, get access to a whole bunch of tutorials, diagnostic deviation levels, and more. Right into here to the Diagnostic Spread Scanner. You get a 2-week free trial. You can check things out. You get access to my deviation levels. You get access to tutorials and the scanner. So if you want to learn about it, check it out. 2-week trial there. Get a free demo over on Nadex under our products after you click on TFNN.com to get access to the Nadex website. I hope you have a great day. Trade safe, trade smart, trade wise, and make sure you are trading one step ahead of the markets. Everybody have a great day, and I will see you tomorrow. Same time, same channel. Stay tuned for a great show coming right up.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.